Hey folks, this is Capital Finance, your place for business ideas, entrepreneurship, investment, personal finance, and many more. In this video, we will talk about how rich people use debt to make more money. So sit back and let's get right into it. When you borrow money, you become a slave. You should never borrow money, is a well-known saying. When you're in debt, your life is over. Despite your best efforts, your debts will not wait for you to pay them off because nobody loans money for free. Their numbers are steadily increasing. Despite all of this, the United States has embraced the concept of debt. Consumer debt in the United States totals about $15 trillion, with an average family debt of more than $5,300. The United States gross domestic product, GDP, is around $21 trillion, which indicates that the whole economy is based on debt. However, there is some good news. In some instances, that's a good thing. That's a controversial stance since most of the debt we have is unnecessary debt. We all know that it will take us decades to pay off all our bills since we have credit card debts and perhaps a vehicle loan or a college loan. What on earth could be nice about that? Let's look at how wealthy individuals still utilize debt to generate even more money to appreciate how debt may be beneficial. Is it a little strange that someone who has a lot of money would utilize debts? That is meant for folks who lack financial resources. Capitalism does not operate in this manner. You can use debt as a final instrument if you know how. You will learn how wealthy individuals utilize debt to produce even more money in this video. Don't forget to give this video a like, comment your thoughts below, and subscribe. First is refinancing. The finest form of debt to have is real estate debt since there are so many ways to get out of it. As a result, people who don't have a mortgage are paying more taxes than those who have one. To take advantage of all these deductions, the wealthiest always have numerous mortgages. Think of it this way. Every dollar you save in taxes is an extra dollar you make. This is one more method the wealthy may further their wealth. However, I'd like to provide a more realistic solution. This is how the rich make money in the real estate market. You saved a lot of money if you saved $200,000. However, if we're being honest, you can't even afford a house with that kind of money. You can't obtain a mortgage for more than $800,000 since you need a 20% down payment. But here's a tip. Assume you locate a home for $500,000 that you want to buy. It's in horrible shape and needs some work, if not a lot. By paying a 20% down payment, you can secure a mortgage from a bank. Let's assume renovating the house costs 10% of the purchase price or $50,000. You go back to your bank to refinance your mortgage, this time at a lower interest rate. That property was worth only $500,000 when you initially took out a mortgage on it. But since you've refurbished it, it's now attracting individuals who want to rent it out. As a result, let's imagine the property's market worth climbs to $700,000. There are two ways to look at this. If you're going to obtain an 80% mortgage on a $700,000 price house, you'll receive $560,000. Your first bank, which loaned you the initial mortgage, will get $400,000. And after subtracting the additional $50,000 in remodeling costs, you'll have an extra profit of $110,000. You borrowed $100,000 to buy a house, and now you have a rental property that you can use to grow equity and create passive income for the rest of your life. On top of that, because you have a mortgage, you won't have to pay taxes. Real estate investors often use this strategy. Now tell me, is this a horrible idea? I'll leave it up to you in the comments area below to provide an answer. Next on this list is debt. Many businesses rely heavily on debt as a source of financing. It may sound unusual, but borrowing money to start a business is a bad idea, and I would never do it myself. However, debt is the greatest option for specific organizations, mainly established ones. What if you want to start a shirt business? Despite its widespread availability, there is almost always a market for this particular item. For example, you would go to China and locate a factory that makes that specific type of shirt at an affordable cost. You'd buy a crate of shirts, send them to the United States, and then hand them out to your customers there. However, these days, most transactions are carried out via websites like DHgate and Alibaba. It's not necessary to travel to the manufacturing facility unless it's a more involved product. The drawback is that you don't have to pay for the things before you can use them, but that's not a deal breaker. This is how China has transformed into the world's most prolific manufacturer of just about everything in the last half-century. Thousands of factories throughout the world labor around the clock to manufacture everything the world needs, and many of these firms would be happy to lend you their products in exchange for payment at a later date. To borrow from a stranger, of course, you'll have to create some trust with them first, but this has been the norm for more than 50 years in business. At that point, the manufacturer would be paid, and he'd be able to borrow other things to sell in other parts of the world. You're telling the factory, I can help you sell it if I can sell it. Anything above this price is going to be my profit. The advantage of this method is that you're not risking any of your funds. Because of this, selling is one of the most important abilities you can learn. The third is Forex. Here's how Forex trading works. It's feasible to utilize the US dollar in China because of the Forex market, which is where currencies are traded. To pair your workers in China, for example, you need to buy yuan in that country. As a result, foreign currencies may be purchased on the open market by anybody or any corporation, and the value of these currencies changes in response to many variables. Increasing interest rates, for example, by the Federal Reserve can either limit the number of dollars available on the market or make the US dollar more valuable relative to other currencies. So, if you know which currencies are going to increase or decrease, you may earn a lot of money in the market. The Forex market is unique in how you can borrow up to $100 for every dollar you use to trade. That implies that if you trade with $2,000, you can have a stake of $200,000. If you make even a modest profit, like 1%, it will be tremendous. The fourth one is credit score. This shows that debt is a strong weapon that every successful firm or entrepreneur employs in a variety of ways, particularly if you have an established business plan. The technique of borrowing money to fund purchase orders is common. As a result, stop focusing on the negative aspects of life. The worst kind of debts are those that accrue interest at a rapid pace, like those incurred via the use of credit cards. However, if you want a lower interest rate, you must lessen the lender's risk in lending you money. What's the secret behind that? You establish yourself as a dependable client. There are trillions of dollars in banks just waiting to be borrowed, and even if there isn't any, banks can manufacture money out of thin air. Finally, hedge funds. Hedge funds are created by the wealthy to increase the wealth of the rich, and as a result, they typically employ controversial techniques, investing our hard-earned money in the hopes that our forecasts about which businesses' stock prices would rise are the activities of people like you and me. Hedge funds, on the other hand, often employ an entirely different technique. In the instance of GameStop, they aim to profit off the company's downfall. In that case, hedge firms lost more than $13 billion because of the internet's challenges to them. However, how do hedge funds generate money by borrowing money? Take Facebook as an example. If you believe that the most popular smartphone manufacturer, Apple, will soon declare that it will no longer allow applications like Facebook or Instagram to track your online behavior, this might have a significant impact on the business model of companies like Facebook. You contact your broker and borrow $200 worth of Facebook stock and immediately sell it on the open market for $200. Great! You now have $200 in your bank account, but you still owe your broker one Facebook stock in exchange for your success. Let's pretend you're correct then. The following week, the price of Facebook's shares falls to $150. Using that $200, you buy one Facebook share for $150 and return it to your broker, taking the profit. Bravo! You've just made $50 off a stock. Theoretically, it seems simple, but putting it into action is incredibly complex and challenging. What happens if you make a mistake? What would happen if the price doubled in a matter of hours? You still owe your broker interest on the one Facebook stock you borrowed? If you don't return it, your broker will charge you $400. To put it another way, you can only lose the amount of money you invested in a stock. However, if the price rises while you're shorting, your losses will only increase because the stock price might theoretically grow continuously. You have the potential to suffer an infinite number of losses. If you have 70 analyzers working for you, surely you can make a lot of money by utilizing this method. If you found this video helpful or entertaining, please give it a thumbs up and subscribe if you haven't already. You're at the right place if you want to learn all you can about investment and finance. The next video will be up soon. See you on the next one.